If you've been expecting the bond bubble to burst, keep waiting. Yes, it hasn't happened yet. The 10-year U.S. Treasury now yielding around 1.7%. That's not far above the all-time low of 1.39% from a few years ago. What's going on? Bonds are rallying because investors still think that U.S. debt is safe and secure. Contrast that with what's going on in the rest of the world. Europe's economy is a mess. People are worried about a slowdown in China. So the U.S., even though growth isn't fantastic, still looks a lot better. But what about the Fed? Isn't the Fed going to be raising rates sometime later this year? And shouldn't that push rates higher? We think that that's probably going to happen, but for the time being, it just seems that investors could care less about what the Fed is going to do. They're more interested in safety and security. They're still buying a lot of U.S. debt, so bond yields could fall even further and maybe even threaten that all-time low.